Hey everyone, hopefully you're having a good day. My name's Andy. The channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or finance. So we're going to dive right in and take a look and see what people are sharing. If you want to follow me at Finance, and if you want, join our community at finding-value.com. We dive deeper into all of these potential sectors that are incredibly cheap in the commodities space, looking for value. Now, if you don't like commodities and you want information about something else, you can join and ask me directly, and I can give you my opinion on those other sectors. Whatever those sectors are, it could be technology companies. We can take a look. The only thing I'll say is I don't think they're going to be entering the next 5 years or so. I'll call it that the valuation of those sectors are overvalued, and I don't think they're coming into market conditions that are going to be ripe for them to continue to have the valuations that they have, is what I'll say. So coming on down, we got Brandon Bello. He says allocation to commodities is at a 7-year low. There's tons of dry powder on the sidelines. Big money cannot ignore the cash flows for much longer. Eventually, they will chase commodities as relative outperformance versus the S&P 500 widens. It is bullish. So that is the allocation to commodities at a 7-year low. You can see 2008, 2006, 2011 was a high, 13 was a low, 20 was a low, and 24. This was a fantastic opportunity to accumulate commodity companies. April of 2020. I think that we are in another fantastic opportunity here, probably either this month or the next few months, to accumulate commodity companies. You want to buy them when everyone else hates them. And we have net oil length short, first time in history in oil. Is this going to be the bottom? I don't know that. No one knows that. If you're listening to people that they think they know that they can call bottoms and tops, I'm going to say just, that's BS. It's BS. I would stop listening to them, and you need to adopt strategies that work where you get an entry point, something's cheap, and then you wait for that to materialize out in the future. The market conditions change, and those changing market conditions is what we're looking at here. It's a out of favor market condition, but that occurred that might be 3, 4, 5 months here. And then it changed to an increasing market condition, and then it swaps back and forth. And that's the cycle going up and down that we're getting on this here. And we want to invest when it's down in all these little, troughs down here. I just as an example, guys, I bought Tech Kaminko in 2009. I think it was in the beginning of 2009. I don't know the exact date. I don't know if it was January, February, March, April, somewhere in there. I bought it for like $2 or $3. And it went all the way to $30 in a heartbeat. And I was like, oh my God, that is like it was literally only took like a year. A year or two. And it took that was a 10 bag back in the day. I didn't have a lot of money in it because I didn't really know what I was doing that well. I was still a very new early investor. I just knew that I should buy when there was fear, which I did. And I trial and error back here when I was first learning how to invest. Over here, I'm a freaking sniper compared to what I used to be. I'm snipering off companies. I'm buying stuff at lows, and I'm gonna try to push it. I'm gonna try to push it when the opportunities come. I'm gonna buy. I'm gonna continue to buy, and I am razor sharp on the companies that I like, and I've got my rate of reasons of buying these things. I am so much better prepared than what I was back in this time frame. In my opinion, you need to get there. And that is the most valuable thing that you can do as a young investor is you need to get a mentor. You got to figure out how to do that. If I knew how to do that in 2009 and had a mentor in 04, 05, 06 when I first started investing, I would have made millions of dollars in the bottom of 09, millions. Because I knew what to buy, when to buy, how to get that conviction, what to look for in companies, on and on and on and on. And that is what I'm teaching on the website, that exact thing of how to sniper these things off. Andrea Spanos says, you think the energy demand is weak. So does everyone else. Net short position in gas oil futures is now more extreme than during the first lockdown. So that's ICE gas oil futures, COT managed money, first time it's net short position. Now, I want to ask everyone the question here. And I asked my kids who are 7 years old. I said, hey, look, is this a bottom or a top? They say bottom. I say, what is this, a bottom or a top? Bottom. Is this a bottom or a top? Bottom. What is this? And they're going to say, well, it's probably going to be close to a bottom. That's all they're going to say. Could it go down further? It could. But it's best to start cost averaging in when you get down to this zero mark, which we got here. 2020 was a great time to invest in oil. So what do you think this is going to be? An opportunity or a time to go short? And I don't have that answer, but just a question. Yellow Lab Life Capital, it says 72% copper demand growth over 25 years is 2%. That's compounded annual rate of growth. Right now, 2% is 600,000 tons per year. 2 QB2 divided by per year. It says if that's the growth rate, it's pretty hard to get excited, so ready and willing to invest. And if $4.50 consensus copper becomes 5 in real terms, that list of tenable projects will grow materially. Sort of makes copper down the road unless it's a tier one, what's the point sort of commodity, just like iron ore, lithium, and met coal. I don't know, just a random eucalyptus thought. This is what I'll say. You can say all this. And what I see when I read this, I don't think I should go long copper. I read that and I say, oh, that's all future oil demand. That is all future oil demand. And all of these copper grades that are coming on, they're all under 0.5% copper. A lot of them are under 0.4% copper. Do you know how much oil is going to be required to get that out of the ground? I mean, if there's this much growth per year and we're going to go 72% copper demand over the next 25 years, that's all, unless we go to something else, it's all oil demand. It's all diesel and oil, and it could be some other stuff like nat gas and maybe some other stuff depending on where that electricity or whatever is being generated from too. But it's a lot of oil demand. Danny says, people have been calling for a recession since 2022. It's fine to get things wrong. But I have yet to see anyone then say, I was wrong. Something is different. Those people have simply moved their call forward every 3 months. Recession calls are a black hole, very hard to exit. Totally agree. Now, here's the thing that I would watch. We are doing this and we're watching it on the website. And this is something that I will update every once in a while when the data comes out. And I think it should be coming out soon. But all I'll say is there are certain market conditions where recessions most likely come from. It's coming from the housing market. And I'm looking at some leading indicators where if they go up, we have never had a recession in the history of the markets when these indicators are going up. I don't want to share it with everyone because I feel like I need to keep some stuff for my members. So we'll go over that, in the question and answer sessions, and I'll let people know what that looks like. That is what I'm looking at. Now, if that indicator goes up, these guys are off sides. These guys are off sides. Now, the indicator that these guys are looking at is most likely the 2 and 10-year yield. And that has validity behind it, no doubt. But there's a stronger metric that we can look at that might influence where the 2 and 10 goes. That's all I'll say. Jensen Huang is selling NVIDIA as fast as he legally can. Look at the amount of selling compared to the past 5 years, and it's just get out of this stock. 20 million, it's 25, 26 million, just on and on and on. He's dumping his stock, guys. He knows it's a top. When you get insider selling like this, it's a top. Adam says India is the new China for energy growth. So India's petroleum consumption just rip into the upside here. Look at that. That is what I'm in oil for. This is it right here, guys. So we can implement a lot of electric vehicles in America, and it won't impact oil demand all that much. We could go down slightly, but it's not going to impact it very much because it's a long time to adopt, and transportation is not as big of an impact as what most people think. This here is ridiculous. I mean, they went from 145, let's take 2019, to 160 over a 5-year period. That's pretty good growth. Pretty good growth. Scottie Pippen, I want to read this to you guys. It says, as you get older, you'll realize that a $30,000 watch and a $30 watch both tell the same time. A Gucci wallet and a Target wallet hold the same amount of money. A $10,000 house and a $100,000 house host the same loneliness. A Ford will also drive you as far as a Bentley. True happiness is not found in materialistic things. It comes from the love and laughter found with each other. Stay humble. The holes dug for us in the ground are all the same size when we pass away. So I completely agree with this. And I mean, I came to this realization probably when I was, I don't know, 10. Like it didn't take much for me to come to this realization. I was always on the logic side, much less on the emotional side. There are some huge things that are different from me, different in me. Maybe it's a personality trait. I'm not exactly sure. Versus a lot of other people. Those things that are different is I don't care about status. I don't care about what people have or materialistic items. The things that I find highly unique and the things that I value in other individuals are things that I cannot do myself. I can make I can make millions of dollars if I really wanted to. I have millions of dollars, but I could make tens of millions of dollars. I could go and do those things if I was obsessed with money, and that will come with time. But I could have done it way faster if I really, really, really wanted to. But there's a thing where you're exchanging your time for money, and that time in those years might be more valuable to me than the money that would be exchanged for it. So I wasn't willing to exchange my 20s, which I was very in shape, very healthy, doing a lot of fun things physically, that I didn't want to trade for more money. I didn't want to work 80-hour work weeks, and I didn't make that trade. But I could have, and I could have made a lot more money, but I didn't. And this is kind of similar to what this is. You can do that, and that's fine. But what I'll say is there's a few things I wish I would have done when I was younger. I wish I would have learned how to invest even faster. The problem is I didn't know who to go and who to learn from. And I still don't know really who to learn from. I've been trying to, you know, gain as much refinement in my investing as possible. And I'm losing people to learn from. There isn't that many, and I'm getting better and better and better where I'm starting to question if I've passed those that I am learning from, which is a little bit crazy. I've always thought exactly what he said. I've never purchased very expensive items. Um, I mean, there's obviously things that are cool that you want to buy of good value, no doubt there. You don't want to buy junk. You don't want to, be a frugal guy that just buys a bunch of crap. You want to buy nice things. You just want to buy things that are going to last. A Honda versus a Bentley, okay, that's a totally different, deal. But Hondas are good. Toyotas are fine if they're trucks. I like the Toyota trucks, but um, yeah, that's what I'd say there. That's where all your money's going to be made. It's doing the decisions on a day-to-day basis of buying maybe you don't buy a $30 watch. Maybe you buy a 80 or 90 or $100 one that's really nice, but it's not 30,000. And obviously Scottie Pippen, he had a bunch of money as he was growing up, between his 18s and 20s and stuff. So he probably bought a bunch of crap. So yeah, he had to come to that realization. But yeah, I've been living in if you were to draw it up and to the right, wherever it starts to flatten out, that's where I stop and I get the value versus price. And that's where I live. So coming on down, we've got a crisis could send gold to $10,000 easy. When I read this, I said, well, are we already in a crisis? I mean, we've got debt levels that are exploding higher. Tell me what a crisis looks like. How do you know we're not already in one? I go to the store and I buy some, I don't know, I buy some meat, I buy some stuff at Sam's Club or wherever, and I'm just like, holy crap, this is expensive. And I used to get out the door, $100, around $100 some years ago. Now it's like two, $300 no matter what I do. Even if I think, oh, I went in and did a light purchase, it's like 140, $150. I'm like, geez. Apparently, pistachios are gold now, and same with ribeye steaks on a per pound basis. These are like the ongoing rate of gold. But yeah, I think we could already be in the start of a crisis or already in one. And it's very hard when the frog is sitting in the boiling water to tell what's going on if it's heating up slowly. And I think we could already be in one. Here's gold. A rate cut would send gold parabolic before markets crash in coming weeks. Could it very well could. It very well could. We've got silver divided by the DXY. That's a big breakout there. What that is measuring is the relationship between those two. So the DXY is not a good measurement from an absolute value term, but the DXY does go down when interest rates go down. Silver, conversely, usually goes up when interest rates go down. So you're going to see this break at a potential break point, which we have. So that's looking pretty good for silver. Gold reserves proven and probable by company. Now, I was looking at this, and this is proven and probable in ounces. Newmont has 136 million ounces. And then I go to the bottom, like Kinross and Northern Star, they're at 21 and 23 million ounces. You know what's crazy? I have a few companies that I am invested in that are junior mining companies that have more ounces than these guys at the bottom here in their projects, a handful of them. And I think they are the best opportunities the market has to offer. Right now, they're being priced at like $10 per ounce of gold in the ground. 10. Yeah, you heard me right. 10. If we get to 100, that's a 10 bagger. If we get to $400 an ounce, which some of these projects, they start them and then they sell them to some of these big boys that need ounces in the ground. It could sell for a multi-hundred dollars or even more depending on where gold goes. Well, that's a 30, 40 bagger from where we are today. That's exactly right. It is exactly right. And you need, as an investor, to understand that. That is the reason we're there. In a gold bull market, when these guys start to make money, which will be soon, they're going to start to make a lot of money. They're going to start to go on the hunt to buy things. And they'll probably have to buy some certain things out there. They're going to have to get these reserves back up. And if you've got big deposits, that's where they're going to be purchased. I think anything greater than 15 million ounce deposit is a pretty dang good opportunity. Brandon says, this tweet is all you need to know about the gold bull market. Gold is hitting a new all-time high, yet news and social media attention are near multi-year lows. The quietest bull market I've ever seen. Eventually, people will care and FOMO buy. And there is, this is the custom searches against gold going down while we hit all-time highs. Art Berman says, at 60, or I should say Eric Nuttall says, at $65, I think we lose 500,000 barrels per day of shale production. That's equal to a global 1.5% drop in GDP. We believe in a fundamental price today of $84 Brent, which is about $80 WTI. So if we stay down here, we're going to lose production. We are at supply destruction prices in the 60s in per barrel. But a lot of people think that we are just going to dive bomb back to 30s or something. It's possible, but we're going to lose production if we do that. That's the self-balancing mechanism. The rise of coal consumption. Look at Asia Pacific, my lord, just ripping it. And the rest of the world has been declining as. So really what this is, Demand for coal in Europe, North America, and rest of the world, the demand worldwide isn't going down. Do you know why? They're just shifting their production over here. So they're saying, go produce the crap we don't want to produce. And then Asia's like, okay, but we need coal to do it. That's all that's going on. This isn't declining emissions. They're just shifting emissions around the world. That's all they're doing. And they're like, oh, well, we're super clean. It's like, no, you're just not building crap. That's all it means. California is so expensive. Rent 1,500, food 600, car 465, insurance 198, 2,763 a month. I can tell you a couple of things here that I could save on. Car 465. What are you doing here, buddy? I could buy a car for 4,000, 5,000 bucks, and then my car payment would be zero a month. Your maintenance cost, I don't know, some of these cars so I own a little teeny car, and I just had my power steering line blow out. And if I went in to get that fixed, I'm sure it would have been many hundreds of dollars to fix it. I purchased and I changed it myself on the car, and I had leftover fluid, and what it takes is Dexos automatic transmission fluid for my power steering. It was like Dex 3 or 4 or whatever the thing is. I had some downstairs just by someone leaving some here. Long story about that. It was an automatic car. They needed some, and anyway, it was left over. I bought the part for $20 online. I bought it through Home Depot for 21 bucks shipped. $21. I solved my power steering leaky line for $21. And that would have cost many hundreds of dollars to fix if I brought it in. 21 bucks. And it took me about an hour to do. Insurance, $198. Now I drive old cars. If I buy a $4,000 or $5,000 car, my insurance on that car, on the cars, if I were to look at a single car, is $200 a year. I have liability only, and I'm sure it'd be a little bit more if I had that car only on liability and only insuring that one car. So call it like 300 or 400 bucks. That's $300 or $400 per year, not 198 per month. This here is the problem. You don't want an expensive car. It steals money from you. Insurance also takes money from you, and you've got the registration costs. So my total cost of my car is ridiculously low. And I can fix things on the car. So the skills that I've acquired to save money is fixing cars. And I know how to fix them quite well. It says, do you think money can buy happiness? Yes, I do. Now, I don't think money can buy happiness for a sad person. No. But I think money can enhance a happy person and can buy more happiness, if that makes sense. So you have to be wired to already be happy and to enjoy life for the things that you can enjoy. One of the things that I really enjoy that is free is I enjoy the weather quite immensely. When we have warm days, the sun is out, and I go out for a walk, I absolutely enjoy it. We have very little humidity here. We have very little flying bugs. So I can go outside with no bugs and very little humidity, get sunlight, walk outside and stare at mountains and trees and go on a nice walk. And I enjoy that every single time. Now, is that something that money can buy? No. That's just, I happen to live here and I like doing it. But I also think where money comes into play is I can go on that walk whenever I want because money allows me to do that. Money allows me to do the things that I want to do when I want to do it more frequently. So I think it can buy happiness to some extent. And I think not having money can also put a lot of stress on you. So it's a combination of those two things. And I've read things where if you make more than a certain amount, 70, 80, 90, 100,000, whatever it is, that happiness declines as you make more money, or I should say happiness doesn't move higher at the same rate once you pass that. But what I would say is it does, because if you have enough money where you don't have to do things where you don't want to do, like if you don't want to have a 9 to 5 job and you have the money to make that happen, I would say it does buy happiness. And then Logan, yeah, we talked about that last time. So that is where my mind is at for that. And we'll end it there, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. We have Mayday coupon code that's active. And that's all I've got for today. Look for the midweek update being released today for those that are the members. And that's just me sharing my opinions and what I'm looking at, what I'm buying, sharing what I'm doing too. I did make some purchases recently, and I'll make updates and reasons of why. And you can see all that. All right, guys, we'll catch you next time. This is Finding Value.